Well, the sell-off continues on the screen. Before we go to our next guest, should just pull out intraday charts on some of the sugar stocks because the news is on your screen. The ban on exports continues, which basically means lesser avenues of making money on the back of high global sugar prices because that ban is going to stay. It is the festive season, so perhaps the government has taken a view that you need to ensure adequate availability of stocks here in India first. And that's why a lot of the sugar stocks have cooled off from their highs earlier in the morning. So that's something on sugar. But let's get to our next guest. As promised, Jitendra Gohil, Chief Investment Strategist at Kotak Alternate Asset Managers, is with us now. Jitendra, good morning. Good to have you on the show. So you give us a sense, I think investors have really been looking at this consolidation in the market with a little bit of unease and maybe some nervousness as well now because the consolidation has been on for a while. I mean, the market has been in 1,000-point range right from the 1st of July. I was looking at it. That's when the Nifty scaled 19,000. Just at the end of June, and we've been in this 1,000-point band. Now here we are in October. A lot of factors at play. What's your sense on the listed equity space?
Hey, hi, Surabhi. First of all, thank you for inviting me on your show. I think last time when we discussed, the view was that 2023 is going to be a rewarding year for Indian equity investors with uptick in the second half of the year. Now, market has its own chart, so market may consolidate and then jump. So we saw almost 12 to 18 months of consolidation, and after making a bottom in the month of March, we have seen this rally, and now again we are consolidating. So that's a part of the cycle, and I think we have to play around it. But what we feel is that one should look at 12 months perspective, and there also we feel that there could be a kind of a high single digit to low double digit kind of return expectations that we have from the overall market front. So I feel that, yes, we are consolidating, but that could be a kind of a buying opportunity in some of the sectors. I feel that, India has become more resilient, and definitely India has surprised many. And it's been my long-term view that market is going to see some more surprises coming from the macro, coming from the way India is growing. So I feel that there is more headroom for India to grow. I feel it's a near-term consolidation, and one should look at buying right stocks and right sectors over the next 12 to 18 months perspective.
Jitendra, is this the time then to up the equity market exposure if someone has a bit of a medium-term call? I'm not talking about a 1-3 month kind of a call, but maybe a 12-18 month. Is this the right time then to put in money, fresh money, bulk, discretionary money?
Reema, I think it's a matter of consolidation. So I feel that India's earnings growth is going to be 15 to 18%. So every couple of months, you will see that the valuation becomes cheaper as we roll forward our estimates. So it depends what stocks you are buying and what sectors you are buying. For example, market is closer to its all-time high, just few points below its all-time high. But there are certain sectors, for example, look at the air conditioning industry. The topmost air conditioner is actually down and it hasn't participated yet. Look at some of the chemical companies, which are still going to see a lot of pressures in the next couple of quarters. So while some part of the market is already rallied and some part is actually languishing, and I feel that some of the large caps haven't participated enough. So it depends if your time horizon is 12 to 18 months. Yes, I feel that some of the large caps are actually looking very attractive. And there I feel that one should park their money. Otherwise, I think looking at overall fundamentals, we don't expect market to see major correction. And even if there is some correction, let's say due to oil prices or due to global weakness, global macro weakness, I feel that there's a lot of buying interest already on the sideline, which might come into the market and support it. So I feel that, yes, if you are looking from a 12 to 18 months perspective, you should use this consolidation to buy in the select sectors and stocks.
Okay. Hi, Jitendra. Morning. This is Pavithra. Thanks for joining us. So 2 questions. You did mention that some of the large caps have not participated as much. So would your preference right now be for large caps, and would you be avoiding the mid and small caps. That's one. And you have been mentioning that, there are some sectors which could still pose good opportunities, which have not run up too much. Which are those sectors? Where do you see these opportunities really concentrated today?
Yeah, hi. So just to give you perspective, last 2 months ago, we actually upgraded India to neutral from underweight at Camel, Kotak Alternate Asset Managers. We have upgraded our view on equity to neutral from underweight. Now we feel that market is not going to see major downside, and even if there is a downside, we will see buying interest. So we feel that yes, large caps are preferred bet at this point of time, as the valuation looks a little bit stretched for India, and hence in this consolidation phase, we expect that large caps should do better than the mid caps. But from a longer term perspective, just to give you some color, we did one analysis where we just took out the top 100 companies.
Okay, a bit of a technical glitch there, but that's the view coming in from Kotak Alternate Asset Managers, where they upgraded India to a neutral 2 months back versus underweight earlier. They believe large caps is a safe space where you can park your money for the next 12 to 18 months. Didn't get to quite chat about this sector.